We will get started with the PPP presentation.
Good afternoon, everybody. My name is Bob Grossman. I'm a founding partner of Grossman and Ford, and my co-presenter today is Senior Tax Manager Mike Weber. We've spent a great deal of time looking at PPP items since the early part of the year when it was passed, and that's going to be the topic for the next hour. The only administrative announcement that Mary Lou didn't cover is if you did get up to get a drink and you're doing this from home and tripped over the dog, call our main number, ask for Mary Lou, and we'll get an ambulance on the way as soon as possible. Okay. We have 8 hours of information to convey to you in about 55 minutes. So you'll see one of the polling questions says that, or ask the participants that if you have an interest in a more extended program on the forgiveness elements of the PPP loans, to obviously to answer that in the affirmative. And Don Johnston, my tax partner, as well as Mike and myself, have done 2 extended programs in the past, and we could do one more to try to cover these loan forgiveness type issues that continue to rise up. So with that little brief overview, we're going to get started because we don't have a lot of time to spend with you today. There is on our website, and Mary Lou has mentioned this before, as did Melissa, the Coronavirus Resource Center. The prior webinars that we did on these topics on PPP loans in May and late May, I believe, will get you up to date, excepting for today. Although, again, there are new developments that are beyond the scope of today's presentation as well. So let's talk just a little bit about background so we can get moving for those people that haven't participated in the past or perhaps are attending that haven't had a background or impact associated with the PPP loan program. The name of it is really the Paycheck Protection Program. It was part of the Coronavirus Aid, Relief, and Economic Security Act that was signed by President Trump on March 27th. It was basically put out there, this particular program, and we'll refer to it throughout the day as PPP, to flood the economy with a lot of dollars to help with that shutdown when we had the economic close down at the end of March and into April. And so obviously there are parts of the economy that aren't open yet. Nevertheless, this program is closed for the first 2 rounds. We're now in a mode of forgiveness, and we'll get into that. They made the legislative language very broad and very easy to comply with, and so the popularity of this program was huge, especially the aspect of it that these monies could later be forgiven from a liability standpoint for companies. So it was more like a grant than it was taxable revenue that came through or a loan that needed to be repaid. In the CARES Act, they had very little guidance. But what they did do is they mandated that all the guidance that needed to be addressed by us in the user community, that's you as the borrowers and us as advisors, was to be released by April 26, 2020. Well, you know, that mandate was blown off by the SBA. They just weren't able to keep up with that. There were a lot of developments. You have, you know, thousands and thousands of borrowers and advisors coming up with more complex issues all the time. And what we've seen is a trickle-out effect associated with the disbursement of further guidance through the issuance of what the SBA and Treasury refer to as frequently asked questions, FAQs. And the latest FAQ was issued on October 13th, as you'll see as we go through these materials. There are about 50 to 55 FAQs right now, I believe, unless one came out earlier. Until there's further guidance, till there's further statutory oversight, if it should come through Congress, we're allowed to basically depend on the CARES Act, the Flexibility Act, which was passed a little later, and provided a second round of PPP opportunity, and also the FAQs and other SBA guidance. So those will serve as the source documents for the program as we go through them today, and as we drive through these fundamental aspects of the PPP loan. You'll note that some of it we're going to go over very quickly. Mike, I don't think he volunteered. I think I volunteered him to go through the technical requirements of the forgiveness calculations, and that's impossible to do in an hour, let alone as one section of this. But he'll give you a high overview of it. And again, he and I, as well as Don Johnston, are always available for questions. And we will do another program later if it seems that the interest is there for that. So with that, I'm going to turn it over to Mike to talk a little bit about the general procedures for the forgiveness part of the loan.
Okay, thanks, Bob. And while the SBA and Congress and the federal government did a fantastic job, I think, with respect to getting all this information out there as fast as they could have possibly done it, they still also did a fantastic job in making the process for forgiveness kind of convoluted. And the first thing that really the question we're really getting from people right now is, when in fact do I have to apply for forgiveness? And the technical answer to that is that you have 10 months from the end of your covered period to apply for forgiveness in order to not have the PPP converted into an actual loan. Now, there's an enormous amount of confusion with respect to this, because on the forgiveness forms, there is a date printed in the top right-hand corner, and that date on some of the forms is October 31st. On some of the forms, it's November 30th, and way back at the original outset when some of these came out, I think there was even a June date on there. And so, much like they've been doing with, again, a lot of the frequently asked questions that have come out, they've actually highlighted this point and said that, no, the answer right now is that you have 10 months from the end of your covered period to apply for that forgiveness.
Yeah, keep in mind that that date is only for the Paperwork Control Act of the federal government, and they've referenced that in their questions in further detail. So it really has nothing to do with the filing date for forgiveness, as Mike just alluded to, and it doesn't have to be paid attention to.
Now, there are, several nuances with respect to, if you apply prior to the 10 months, but then your forgiveness occurs after the 10-month date runs, or if you wait until after 10 months and then you obtain forgiveness. So if you find yourself in that situation, again, time doesn't allow us today for us to go into all those different types of examples, but the reality is that if you're applying within 10 months of the end of your covered period, you should be able to obtain forgiveness without having to make any payments. Now, what forms should you be using whenever you're applying with your local lender? The SBA has actually released at this point 3 different forms that you can use, and based upon the specific circumstances that you find yourself in, you're going to be using one of the forms listed on this slide right here. The form 3508, 3508EZ, and the 3508S form. The 3508 form is the longest form and has the most detail on it. And this form really is for those borrowers that had seen reductions in their full-time equivalency or seen reductions in the pay that they were paying their employees. So if you're dropping anybody's wage below 25% of what you had previously paid them, then your process is going to be a little bit more cumbersome in terms of what information and what application you're going to need to fill out, when trying to obtain forgiveness, and that's the 3508 form. Just as an aside, in all of the applications that I've assisted with to this point, I have not had to deal with the long 3508 form. Perhaps Bob has at this point, but I have not. Mostly what we're seeing is the 3508EZ form. And this form really, as you can imagine, was designed to be easy. And if you're not reducing wage and you're not reducing the amount of hours that your employees are working, you're eligible to use this form. And there are some actual technical requirements, and the definitions are listed on the slides in this presentation. Of course, if you're a self-employed individual, independent contractor, or sole proprietor with no employees, you're eligible to use this form. If you haven't reduced anybody's wage by 25% during the covered period, you're also eligible to use this form if you have not had an hours reduction, or, as notated on this next slide here, you were unable to continue your normal business operations, because you were complying with government health regulations and guidelines. So if you find yourself, again, in any one of those circumstances, as notated on these slides 1, 2, or 3, you can use the 3508EZ form. And like I said, this is the form that I'm seeing most of our clients using at this time.
This form is also to be used by those people that are self-employed individuals, independent contractors, et cetera, who did not have employees reported in their application to borrow the funds and has no employees at the end. So that's a simplified way for them to get their loan forgiveness as well. I would also note on these forms, about a week ago, I had a call from a client who was unable to, who had spent the day uploading information to fill out the full 3508 form into one of the larger financial institutions programs, and they couldn't get it to upload. And the reason for that was based on the information that they had, their own facts and circumstances, they weren't required to file the log form. And so what we're finding is it seems that most of these institutions have built into their programming for uploading the data to get loan forgiveness, a mechanism that allows for a default to the form that's easiest and least complex for the borrowers.
I have seen at this time several 3508S forms, and if your PPP loan was $50,000 or less, you're automatically eligible to use this form. You have to make a number of affirmations on the form and provide that to the lender that supplied you the PPP loan, but there is no documentation or otherwise any other requirements when submitting this 3508S form. Just to piggyback on what Bob said, thus far, in the institutions that I've had to deal with, some, as you can imagine, the smaller institutions, they are, quite frankly, accepting all this information via just PDF. And so it's just, essentially an email to perhaps the representative that you or your client has been dealing with, and they will take it from there. Other more sophisticated financial institutions have, again, their own software that they've built. Some don't even have it off the ground yet. In fact, I was talking to one individual this morning, and while they are otherwise ready to apply for forgiveness, they have not been told by their bank that they are permitted to actually submit that application at this time because the software is not in fact ready, and the representative that they're working with first has to reach out to them before they're even able to begin the application. Now that doesn't mean that you can't, fill it out by hand and make sure that everything's working the way that you want it to work, so that when you do actually submit the real application, you know what the numbers ought to be. That's really what we're dealing with right now until such time when the institutions get off the ground and we can actually assist with uploading and, putting the actual figures in the online application if that's the route that the institution's going. And with that, I'm going to start the first polling question.
We're going to continue on a little bit. If you think about the forgiveness process, there's really multiple steps to it. And we think those steps first are understanding the timing of the application, which Mike spoke to. Then I think the next step is understanding the proper form and application on which to file, and Mike touched on that as well. Next is basically the protocols for getting the forms completed and conducting the process with your lender, which I'm going to talk about. And then the fourth is going to be the actual technical requirements that are imposed by the CARES Act to gain loan forgiveness. And Mike's going to go over those. So let's start now talking a little bit about the loan forgiveness protocols. These may seem rather simplistic. They come right off of the SBA website, and that's why I put them on the slide. But basically, you have this four-step process where you have to contact your loan lender, your representative of your lending institution, and complete the appropriate form. So that's the obvious first step that's there. In conjunction with the completion of that form, you're going to have to compile the proper documentation that you need, and we'll talk about that in a moment, to sustain the information on the application form. Finally, you're going to submit the forgiveness form and the documentation to the PPP lender once you've completed everything and moved it forward. And we've seen, again, nuances from one institution to the other. Most of the banks now are up to snuff on having you be able to save partially completed applications so that you don't have to do this at one particular setting if it becomes a complex process for you. And then obviously, you're going to want to continue to communicate with the lender throughout the process, making sure that they've received the application, making sure that they have everything they need to get you to the point of forgiveness. Oh, geez, I went the wrong place. Give me 1 second of technical difficulty here.
There, I can go back.
Thanks, sorry. I apologize to everybody. I hit the wrong button. I was looking at the slide and not looking at the thing. Okay, there you go. The first aspect of this is the documentation you need for payroll, of course. And Mike will talk about the technical requirements being 60% for qualifying covered payroll and 40% as being the cap for qualified non-payroll expenses. So those are the two categories that you're going to start to gather information for. So obviously you're going to have to provide, and this again is from the SBA's website for your edification, documentation for all payroll periods that overlap with the covered period or the alternative covered period, including bank accounts, third-party payroll service provider reports, paychecks, ADP, et cetera, and tax forms that kind of confirm that data for the appropriate periods. And that would normally be your 941s and any state and local filings if you needed those to represent total compensation that was paid. So that's a pretty heady undertaking to provide that. There's a lot of documentation. And then they also want to see payment receipts, canceled checks, and other account statements documenting your employer contributions to the health insurance and retirement plans, those that you obviously included in the application process in your loan determination amount. For non-payroll, that would be just as you would think. It's almost like an audit scenario. You know, you have to look at documenting all the expenses that were incurred and that you're reporting as qualifying non-payroll covered expenses. That's going to include, you know, for things like interest payments, lender amortization schedules and receipts, verifying the payments of those interest payments, those mortgage interest payments, lender account statements if you have those. I thought business rent or lease payments, I think it's pretty interesting that they're looking for the actual copy of a current lease agreement. And then receipts or canceled checks verifying eligible payments, and utilities, you're going to need obviously invoices and receipts demonstrating that you paid those as well. So the problem with this list is it's noted within the SBA regulations or the SBA website, excuse me, that this is not an all-inclusive list. And I think what Mike and I found, Mike, you can comment if you like, that the document requests seem to vary from one lender to the next, and it's what they're comfortable with because they're ultimately making the call on the forgiveness.
Yeah, I would agree with that. And one of the things that I found interesting so far is that one particular example is one application of one particular lender is requiring that the borrower submit the 941 payroll tax returns. But the reality is that the payroll tax returns don't actually sync up with anybody's covered period, whether that be 8 or 24 weeks. So the information that's actually on the 941 forms is really of no real relevance as it relates to submitting, you know, documents to prove that you spent money in a particular manner. You know, way back when we started to do these webinars, you know, there was a big discussion about, you know, when does your 8 weeks begin? You know, it begins on the day you get the money, or in certain circumstances, it could begin on the first day of your next payroll period. And then they blew it out to 24 weeks. So, you know, those are the time frames by which you're working, and your 941s don't sync up to any of those time frames. So why a lender would require that you have the 941 submitted for any application is not, I'm still scratching my head on that, because again, it just doesn't sync up to any of the covered periods that you would be looking at.
And the result of that is probably that we would suggest that if you are submitting 941s, if it's requested, that you're going to have to provide a reconciliation of that information anyway on some kind of spreadsheet, Excel, to reconcile the 941 to what you're taking as qualifying payroll. If not, as Mike said, it's totally worthless and meaningless to have the 941.
I will say that at least two payroll providers, you know, and they're, you know, quite frankly, two of the bigger ones, they actually have software built into their payroll system. Have actually gone in and looked at a couple of clients' just payroll reports, and there's a CARES Act or PPP kind of tab in there that produces the actual report that you would need to substantiate the expenses that you're putting on the application. So, in some ways, that is sort of the reconciliation. I don't think they take it from, number one to number two, but you could easily prove out, the difference between your 941 and the report that's produced from your payroll provider. So if anybody's using, a more sophisticated payroll provider, I would note that, you might contact them and ensure that they have the proper report that you need. You might find that they, in fact, already have done all the work for you.
Thanks, Mike. So once you get this documentation in, as Mike said as well, a lot of banks are accepting PDFs. They actually added a question on the October 13th FAQs, and someone asked if scanned documents and e-signatures, et cetera, are all acceptable. And the SBA, of course, in today's world, has to be able to accept that, and they do. Once you get a sense of what this protocol is going to be, what this process is, then it's time to see if you're eligible for loan forgiveness. This is a rather detailed computation, and we're going to spend probably 15, 20 minutes on it. Mostly, Mike will go through the calculations, and I'll chime in where it might be helpful. I don't know if he'll think it's helpful. The first element of that is eligibility. So to be eligible, you have to have certain costs, and we'll talk about what those costs are by definition. What is an eligible payroll cost? What is an eligible mortgage interest payment, et cetera? But it has to be, the first level is, if you want total forgiveness of your loan, you had to spend all the money the way that it's supposed to be spent. So you ultimately had an 8-week covered period and a 24-week covered period alternative that came out of the Flexibility Act that you could choose. So you go through the 8-week or 24-week period, and then you start to assemble the cost records to back up what your expenses were that you paid with the loan over that period. So if you look at that, you have an extended period to apply. As Mike said, I don't need to reiterate that, quite a long time after the end of the covered period to apply. If you don't apply for forgiveness within that 10-month period, after the last day of your covered period, after the 24 periods, then you're no longer eligible, and that payments are no longer deferred, and borrowers will begin making loan payments to their lender. So at that point, it becomes a real loan. There is an exception to that, though, and that exception is answered in this frequently asked question number 3, that basically asks, if a borrower submits a timely loan forgiveness application, meaning within that 10-month time frame starting on the date that your covered period ends, does the borrower have to make any payments on its loans prior to the SBA remitting the forgiveness amount, if any? And the answer to that is no. So as long as you submit your loan forgiveness application timely within that 10 months, then you're not required to make any payments until the forgiveness amount is remitted to the lender by SBA. Now, as Mike said, there's a lot of little nuances in some of these answers, and that's the same thing here. We wanted to provide you with a complete slide deck of what we think is important. We're not going to go into detail on all these different calculations, but obviously that answer is going to vary if you find out later that you didn't spend the proceeds in the 60-40 manner, or you didn't spend all the proceeds, or you had FTE reductions, et cetera. You could end up with something less than the full amount being forgiven, and then ultimately you're going to end up in an environment where you're going to have some loan that has to be repaid at the end, or some accrued interest dating back to the date of the loan as provided. So that's the element on there as well. The last question is to be eligible for complete forgiveness is what you see on the board. I mean, first of all, to get total forgiveness, you have to spend the entire loan amount the way it's prescribed. So 60% or more has to be spent on covered payroll costs. Not more than 40% of the forgiveness amount can be used for non-payroll costs. You maintain your employee headcount and your compensation levels. You didn't adjust them down for 25% below their pre-COVID, pre-pandemic wage levels. Then you're going to fully qualify for complete forgiveness. But these are going to all have to be facts that are proven or basically certified to in conjunction with the filing of the application. If you find that any of these are not fully satisfied, or the loan itself is not spent in the 8-week or 24-week covered period, then a portion of that's not going to be converted and will ultimately become a loan payable to the bank. We're going to move to polling question number 2. which is on the board right now, and give you a couple seconds to answer that. We're seeing some questions come through, and we'll try to answer questions where we can. We're not going to have time to do a lot of question answering, as Michael mentioned earlier in the presentation, but we are available to answer questions afterward, and we'll do the best we can in getting responses for you.
Mary Lou had pointed out to me that somebody did ask a question about whether it makes sense to file now for loan forgiveness or wait until, as per the question, wait until the software has worked out all the kinks in the bank system. I'm going to wait until the end that Bob and I can discuss this, because it goes a little bit deeper than that in terms of when you might want to apply for forgiveness. So we'll hold off on that until the very end, but we will discuss that item.
I'm going to turn it over to Mike now. He's going to talk a little bit about the more technical requirements, and we have, probably for this part of it, 10 to 12 minutes. So it's not going to be as thorough as perhaps you would like. The detail is clearly in the slide deck. That's what we wanted to do for you today. But time didn't allot in a single presentation to cover all of this. So with that, I'll turn it over to Mike and stop rambling.
Yeah, I'll take 15 seconds to just say that we've done several webinars with respect to the PPP, and the technical, calculations that need to be done or possibly need to be done on full-time equivalency or wage reduction. Those calculations in discussion in much greater detail is in those webinars, which are available on our website, or if they're not, you can reach out to us. We can point you in the direction so that you can listen to those recordings. But this webinar is built off of that slide deck, and all of those slides are included in this part of the presentation. The process that you have to go through in terms of determining what amount of your PPP would be eligible for forgiveness is really a three-step process. Well, I'll call it a four-step process. Number one, you have to ascertain what in fact are eligible expenses. Of course, we have these listed in the slides here, and they are built kind of off of what would have otherwise been eligible in the original application process to determine what your PPP amount was in the first place. But you can see here there's certain items listed. Again, time doesn't permit to go into all of them, but they are in fact listed here. There are instructions to all of the forgiveness forms, which do include definitions to all these items. So if there is some question with respect to that, we can go to the instructions, or again, you could reach out to us. But right here are some of the covered costs that we have listed here. Okay, I'm just going to run down these real quick. These are, again, the definitional components that you need to understand whenever you're, applying for forgiveness. We've got, what in fact is a covered loan. We've talked about that. We have our mortgage obligations. We've talked about that. We've talked about the covered period, what qualifies as rent, what qualifies as utility. Again, who is an eligible recipient, how we're going to determine the expected forgiveness amount. Again, diving into much greater detail in terms of what payroll costs include, and here what they don't include. I think I'll pause right here to just say that, payroll costs do not include, any payments made to independent contractors. I know that was a big question way back from the beginning of time whenever this first came out, but again, payroll costs do not include any payments made to independent contractors. They do, at the bottom there is listed, they do include any payments made to general active partners. And so there was, some discussion at the beginning of this process about whether, that's an included item. It is in fact an included item under the payroll cost definition. When you're trying to figure out, how you're going to apply for forgiveness, the first thing you have to determine is whether you're going to use an 8 or 24-week covered period. The reality is that it's going to be unusual if the 24 weeks isn't going to work out for you. The 8 weeks may in fact work out for you anyway, but the 24 weeks, again, because it's 2 to 3 times the amount of your original PPP loan, if you just follow the payroll costs associated with those 24 weeks and you maintain your normal business operations, you're going to have well in excess of the amount of cost that you're going to need to prove 100% total forgiveness.
Yeah, we had a question on that, Mike. Someone asked, why would you use 8 weeks versus 24 weeks when you have more time? But I guess the answer to that is simply that if you can spend it in 8 weeks, you could apply earlier if the banks have been accepting it and got your forgiveness letter sooner.
Yeah, one of the nuances, again, at the beginning was that if you had a situation where you received the PPP money, but your business wasn't open and you decided to not open or bring your employees back, you were rolling the dice that, you know, there was going to be some cure provision, or, you know, again, maybe you had the foresight to think that they were going to allow you more time to spend the money, and you found yourself in that circumstance, then the 24 weeks again would make, you know, more sense. You just would never have spent all the money in 8 weeks. I have some situations like that. It wasn't intentionally planned that way, but it's just kind of the way that it shook out. And again, and I do have a slide on the 24-week issue. We'll talk about that in a moment, so I'll reserve my further thoughts on that. Of course, in order to obtain total forgiveness, you have to spend all the money. Okay, we talked about that. There is a 60-40 split between payroll and non-payroll. So the least that you could obtain forgiveness for is 60% of the PPP amount with respect to payroll. So, you know, the reality is that they're not going to allow, you know, the loan recipients to get this, not bring anybody back, spend the money on other costs and obtain loan forgiveness. There's got to be a floor there on payroll, and that floor was set at 60%. Okay, moving along here. Again, I'm gonna blow through a couple of these slides here. After you've determined the eligible expenses and tackled this 60-40 payroll, non-payroll issue, you've got to determine whether you've actually reduced your employee count during the covered period. And again, there's a technical, you know, algebraic equation out there that you have to follow, and I have it listed on this slide. So if you find yourself in a situation where you've reduced the number of heads that you have in your business, then you might have to consider you know, how the reduction in the full-time equivalency impacts your loan forgiveness amount. One thing I always ask my clients is that, you know, forget about the algebraic equation to this, forget about all the figures. Are you just maintaining what you did before coronavirus happened? Because if in fact that's what you're doing, then there's no way that you've got an issue with respect to obtaining 100% forgiveness. We might have a slight reduction in FTEs, we might have slight reduction in what, you know, you might be paying somebody, but again, if you haven't made any changes, if you just continued on kind of like nothing has happened and maintained everybody, then if you use the 24 weeks, there's just, quite frankly, absolutely no way that you're not going to get 100% forgiveness. So I always like to start there. Think about it conceptually first before you get into the actual details. Okay. Of course, what we've already previously mentioned is that this loan was designed off of 2.5 months of your average monthly payroll. And so if you only had 8 weeks to spend the money, you know, we've seen certain situations where, you know, businesses have not had an opportunity to spend all the money during those 8 weeks. But if you blow that out to 24 weeks, again, you're looking at, you know, a substantially longer period of time. It would be unlikely that you wouldn't have had, again, enough expenses to substantiate the entire amount of your original loan proceeds. And one anomaly that we're sort of finding out right now is that, and again, this isn't authoritative in any way, but if you look at the way that the form is, the way that the forgiveness form is actually spelled out, you could have a situation, again, where you have substantially more payroll and non-payroll costs that are eligible for forgiveness that far outweigh your original loan amount. So if you work through the application, what you'll find out is that even if you have an FTE reduction, it's possible that even with the reduction, those eligible payroll costs and non-payroll costs still outweigh the original loan amount. And you'd have to work through the computation to kind of understand it. It's on page 1 of the actual application form. Again, I had a discussion this morning with somebody about this, and you know, you could see that if my original PPP loan amount was $1 million, but you know, during 24 weeks I spent $2 million, I could theoretically have an FTE reduction quotient of 0.5 and still obtain 100% forgiveness. We think it's possible that that's the way it's going to shake out. We have nothing authoritative on that at this time, but we think it's possible that that's the way that calculation could in fact shake out.
Yeah, this issue was identified first in our firm by Don Johnston working with one of our clients. And really what happens is you're determining a loan forgiveness amount, which can be greater than the actual loan itself. There's no greater than provision, if you will, included in the application. So you would have thought that at some juncture they would not have wanted the loan forgiveness amount to exceed the amount of the loan, but that wouldn't be logical either if you think that $1 million loan is based on 10 weeks of comp and you get 24 weeks to pay it back. So, I mean, we had a question, says, is payroll more than the covered loan amount, Mike? Is there any reason they should even bother submitting the non-payroll costs? And you and I have been through that question numerous times. You want to take it first crack at it?
Yeah, I think that that's a very good question. And my own personal belief is that I would load up the system with as many costs that you could come up with. And I know that it might take you a little bit more time to, come up with the documentation associated with that. But what I don't want to see happen is that when you make the submission, the bank comes back to you and says, well, we're going to knock down some of these costs because they weren't eligible or you didn't have them in the right period, or there's some qualifier in there. So instead of getting 100% forgiveness, you're only going to get 95. I don't know if they're going to give you a second bite at the apple to upload more information into the system to substantiate more expenses. And I just wonder how that would also look, from the lender's perspective, if you're saying, well, we just didn't bother to include the cost in the first place. So I believe that you should load it up with as much as you can. In the event that some get denied, you still have a substantial pool of cost to obtain 100% forgiveness.
The other place where that might have an interplay, Mike, is where you have some reduction in your FTEs or your wages, and if your loan forgiveness amount is significant, it's $2 million, or let's say $2.4 million. You borrowed $100,000 per pay per week, so you borrowed $1 million for 10 weeks, and you pay, and your expenses during that 24 weeks is $2.4 million. The gap between the million and the $2.4 million. The 2.4 could be reduced for FTE reductions or wage reductions, but as long as it's not reduced below the $1 million loan amount, it still exceeds the $1 million loan amount, and it's fully forgivable, as Mike said. So that's kind of an issue. Another side issue that comes out of this that we'd have to talk more online on facts and circumstances for any particular borrower is the idea that literally, if you think about it as I just described it, you could lay off half of your, not a half, but perhaps a third of your staff. And if you paid everybody else the same staff number, the same dollar amount through the 24-week period, you're still going to have a reduction of that 2.4 million in the example, but it's not going to go below the 1 million. So you could have a substantial layoff or a substantial wage reduction based on the formulas, the way the applications are now. And again, Mike and I aren't saying that this is the way it's going to stay, but right now, that's the way the form seems to work mechanically, and there's not enough depth of detailing the instructions to ascertain whether that's the posture that the SBA intended to take in issuing the form or not. Sorry, Mike.
If you find yourself in a situation where you've reduced wages beyond 25% or hourly wages beyond 25%, you do have an opportunity to restore your employees to their, pre-coronavirus level. And if you do that by December 31st, 2020, you eliminate the reduction in the employees, you eliminate the possible reduction in the forgiveness calculation. So I think that's just kind of important to point out that there is a cure provision there. This slide here, starting right here and on the next couple slides, again, is kind of the technical minutia on how you calculate whether you've gone above a 25% reduction in pay for any one of your employees. And I'm not going to sit here and read it verbatim to you because, again, I think that if you've maintained your operations, you're not going to run into this. 25% is a substantial pay decrease for somebody. Perhaps we have, minor situations where that's occurred. I don't know that that's the that we're seeing an overwhelming amount of questions in this regard. So I'm not sure that this, spending a lot of time would be useful for anybody. But I did put it in here, the actual calculation that you have to run through to determine whether you've dropped somebody below 25%. There's also, again, like I mentioned, there's a wage restoration provision. You have until December 31st to be able to cure any reductions that you may have encountered due to coronavirus. So with that, I'm going to go to polling question number 3, and then we're going to discuss some, kind of non-technical related items, non-algebraic technical related items. Okay, with that, I'm going to turn it back to Bob to discuss this part of it.
Thank you, Mike. And Mike, I'm sure you'll join in as we go through this. I did get a question, will the forgiven amount of the loan need to be included in revenue on the tax returns? No, but this is a very odd thing. The CARES Act itself said that the loan forgiveness is not taxable. So that was not debt forgiveness income in a traditional sense. I mean, if you had borrowed a $1 million loan and the bank forgave it for whatever reason, that would be, and you had spent it in your business, that would have been an economic gain subject to tax under Code Section 61. There is provisions for insolvency, but that's the general rule. Here, statutorily, legislatively, Congress ruled that this would not be taxable. What happened later, though, in Notice 2020-32 that was issued in April, and the tax law was signed in March, is the IRS came back and said, well, they're not going to argue that that's not taxable. They couldn't. That was the law. But the expenses that are paid with non-operating income or non-taxable income are not deductible. So at the end of the day, you come out with the same answer, that you have a situation where the debt forgiveness, if you get that, will not be taxable, but you won't get value for the deductions either in the year of forgiveness. And that poses a question that we continue to struggle with from our end, trying to get our arms around it. My partner, Jeff Ford, who's active with the American Institute of CPAs, was at a meeting the other day, an update on the profession meeting, and they had talked about where this matter stood, and it's clearly not a matter that's resolved right now. It is not going to be resolved by the Treasury Department per se. They have their posture and their position, and they're going to stick to it, because the move from that central position that they have, and the position that they have is solid. You would have to legislate it not to be, for those expenses to be deductible. That is, however, what we expect to happen. It's just a matter of timing. Jeff indicates that per the AICPA, colleagues on both sides of the aisle in Congress, in both houses, are supportive of making these expenses deductible. But as of today, we know nothing more than the fact that they are clearly non-deductible. And so while the forgiveness is not taxable, the deductions that you pay with that money, the expenses that you pay, are not going to be tax deductible. There is an issue on state taxes as well. And I know Pennsylvania is decoupled from this. They're not going to let it be tax-free. So the loan itself, once it's forgiven, will be taxable in the Commonwealth. I'm not sure about other states. We haven't tracked down a lot of the other states yet. But very often, most states will use the term decouple or disassociate themselves from federal legislation to maintain their state revenue levels. So that's an issue. And then another issue from the taxation side of it is, if you took that money, 10 weeks of pay, and you spend it on 10 weeks of pay over the 24-week period, where's the money come from to pay the additional tax from losing the deduction? So that's an issue that has to be planned for at an operating level, which is really not tax related as much as it is cash flow related, but something that's serious nevertheless. Now, given the posture of where the IRS is now, and the fact that the expenses that you pay with the PPP loan are not going to be deductible, the question arises as to what is the timing of the income recognition event from the lack of deductibility of the covered expenses that you paid with the proceeds from the loan. Go, Mike.
Yeah, I wish I had a great answer for this, but the reality right now is that, if you're not obtaining loan forgiveness until 2021, it's entirely possible that, deducting the expenses in 2020 is the right avenue, and adding them back in 2021 is the correct treatment, because you don't in fact know right now whether you're going to obtain 100, 80, 90, 85% forgiveness. So, we think it's entirely possible that we could find ourselves in a situation where we're deducting those expenses in 2020 and adding them back in 2021. Of course, just like anything else, that's all subject to change with further guidance or legislation from Congress. And that's why I wanted to hold off on the question that someone had raised saying, well, when should I apply for forgiveness? Should I wait until the kinks from the software are worked out? I mean, that might be a reason to wait, but there might be other reasons why you want to ensure that your forgiveness is not obtained until 2021, this being that issue. It's funny that, you might not think that this is that significant of an issue. It's just a timing difference on when, the expenses would be non-deductible. But a colleague of mine raised this question yesterday to me. If I'm allowed to deduct these expenses in 2020, as some of you may or may not know, the CARES Act actually allows for a 5-year NOL carryback period now. So generating a substantial loss in 2020 would allow this particular person to carry back the loss generated in 20 all the way, back 5 years. If we were not permitted to deduct the expenses in 2020 and we had to add them back, then we wouldn't have that opportunity. And so you can see, I understand from everybody that's, I'm sure, listening in here, oh, it's just time value of money. Of course, we never want to accelerate income. We recognize that. But think about some of the ramifications to that, this being one of them, and this is not an insignificant question to this particular business. So, the answer to this question will have an enormous trickle-down effect on other, potential issues that come up. And of course, in the transaction environment too, there's a way economically to make this work, but logistically, how in fact do you account for entering and exiting shareholders on, let's just say hypothetically, December 31st and January 1st, 2021, if, again, the expenses are deducted in 20 or added back in 20 or added back in 2021. So those are issues that we're seeing now, and we've seen those for the last several months. People have been raising those questions and concerns.
Yeah, and I don't think we can expect to see the level of detail necessary to answer all those questions specifically before December 31st. On this particular issue with respect to the deductibility of the covered expenses that were paid with the proceeds, again, in Jeff's meeting with the AICPA, they talked about a suggested methodology that if you think the loan's going to be forgiven, you should not take the deductions in 2020. I understand what they're saying there. There's some sense of logic to that. But on the other hand, if you're a cash basis taxpayer or even an accrual basis taxpayer who has met the required rules for deducting accrued expenses, that expense is properly put into this year. And for us to summarily just put it in as a judgmental as not allowing that deduction in the current year doesn't seem logical to me. And while it might just be time value money at the end of the day, it's still time value of the money. And you get to keep your money longer if you take the deductions this year and pay it back next year. Now, that being said, again, I really would say that it's our thinking that they have to come out with some guidance before December 31st on this, or it's just going to be total chaos. So even though you may not have your loan forgiven by 12/31, I do suspect that we'll get some kind of indicator from somebody that this is going to happen by then. But it can't happen through Treasury, and SBA won't act without Treasury, and whether or not you can get a lame duck Congress to make this happen remains to be seen. So we're all going to have to deal with that and struggle with that as we go through as well. Before I go over the last points, because there's a couple other recent developments, I did get a question on what is the status of the bipartisan legislation that was proposed earlier in the fall, maybe late summer, to exclude from applying for loan forgiveness any loan that had a principal amount of 150 or less. I think that's kind of died and dried up on the vine, and I think the confirming nail in the coffin on that issue unless it gets new life from somewhere that I don't anticipate now. The last nail in the coffin was when they issued that form that Mike showed you, the 3508S, which basically says for loans of $50,000 and under. So they went to the bother of designing a more simplified form. I don't think you should be looking forward to having the $150,000 loans excluded from the application process. Now we want to talk just a little bit about a couple of other things that aren't going to affect everybody on the call, but are important nonetheless. The first is on October 2nd, about a month ago, the SBA released procedural notice 5000-20057. What this talks about is changes in ownership. And we've had a lot of questions on changes in ownership, and Mike and Dawn in particular have worked on a lot of transactions lately. You have a departing entity holder, you know, going and leaving, and you're taking that deduction in 2020 and paying the tax back in 2021, and I'm leaving the firm on 12/31. There's a question of whether or not that individual owner departing the equity ownership position at 12/31 should be on the hook for some proportionate element of that payback when the time comes to ante up the cash flow to meet the tax on the non-deductible expenses next year. In addition, there's on this notice, it's just mind-boggling how detailed they get in what they're looking for, and I'm just going to touch on these real briefly. You know, they're talking about changes in ownership, and they're basically talking about changes of ownership being defined of at least 20% of the common stock or other equity. So it's a small portion of the ownership, or the PPP borrower sells or otherwise transfers at least 50% of their assets measured by fair market value. Or the third option is there's a merger into another entity and the PPP borrower disappears. All of those entity changes, those ownership changes need to be looked at carefully. And again, if we do a more extended program, we'll get into those in more detail. But for today, understand that they're asking for transaction documents, the SBA. The SBA is asking for a chance to review the documents prior to the transaction close. So it adds a whole other layer of complexity. And if you have a medium-sized to bigger company, maybe about $2, $3, $4 million, that's going to become a real bog down in the process of getting the deal closed. So keep in mind there's this procedural notice on ownership changes, and you need to be aware of that if you're in that environment. The other thing that I think is incredibly important that's just come out on October 26th was this Notice 85 FR 67809. Here, they're soliciting public comments for certain forms that have already been issued, but they're also provide draft forms in this release associated with companies that borrowed more than $2 million and the loan necessity requirements that come off of that. I'm not going to go into those forms again in great detail. Time just doesn't allow. But the form that is used for 3509 is for for-profit enterprises that borrowed more than $2 million. So they have to go through that questionnaire. And the point of that is if you recall, that everyone who applied had to certify that there was economic uncertainty at the date of the application. And of course, that became a big point of contention in late April and early May as to, you know, were there borrowers taking these funds that really didn't need these funds? And that was a big deal until sometime in May, I think May 3rd or 4th, they came out with a ruling from SBA saying they'll safe harbor everybody under $2 million. And if they said that they borrowed less than $2 million and they needed it, they're just going to accept that in good faith under penalties of perjury. But for people over $2 million, which is about 35,000 loans, I looked on the AICPA website today, or the SBA website, excuse me. For those people, they're going to set up these forms, 3509. This is actually a 7 or 8 page questionnaire, 9-page questionnaire, which asks for very detailed, specific financial information, starting with a business activity assessment, and they work through looking at it in Q1 and Q2 from 19, and Q1 and Q2 in 20. So they're trying to compare second quarter 20 with the second quarter 19 in a manner that allows them to assess whether you need to do that. And there's a lot of other questions in there that basically are operational in nature that build off of that point. The other section of financial information that they're looking at is a liquidity assessment. And the liquidity assessment goes into ownership. And so they're looking at tiered entities, and they're saying, were you owned by a private equity fund? Were you owned by another company, et cetera, et cetera? And really what they're looking at is, were there other sources of funds that you had that were able to be used in place of you going out and borrowing this preferential money under the PPP program, PPP loan? And so they're digging deep, and they don't have enough room in this form. They're very black and white answers. I know the AICPA takes kind of a dim view of this form because it is very black and white, and those circumstances were anything but black and white at the end of March when most people were applying. But there are comment periods, questions under both the liquidity assessment and the business operation assessment for optional comments and exhibits to be added. This form's going to take some time. You're going to have to spend a little time to get this answered in a way that protects your interest. If you're a company that borrowed $5 million and you had a great second quarter and third quarter, but the fourth quarter is falling off, there's nowhere to show that. And so companies that had, backlog and were able to run a profitable second quarter because of, the work in the business that they had been able to maintain prior to the COVID pandemic, you're going to need to add that first quarter of 2021 information into this form to be able to help make your case. Interestingly, this form, you can find it on the internet. You can click on the slide and find it as well, but it's not going to be on the SBA website. At least that's what the AICPA says. It's just going to be available through lenders. And if you borrowed $2 million or more, every lender is going to collect this form. There's no question, because that's an important part of the qualification process, is that you are subject to economic uncertainty at the date of application. They're not going to want to grant you loan forgiveness without reviewing this. So I think a lot of people, I think almost everybody that borrowed over that amount of money is going to have to complete this form. And it makes sense, because what they're trying to do is somehow test compliance with the rules without having to look at 30,000 loans, 35,000 loans. So they're going to go through this data, collect it, compile it, and then they're going to pick people to examine, just like the IRS does in an income tax examination. So those are the two big developments that came out last month. And then just a week or so ago, to wrap things up, start to bring it to a head, or to a close, is that one of the courts, a federal court, I know it wasn't the Supreme Court, but some federal court ruled that all the SBA's information that they have gathered in conjunction with granting these loans has to be shared to the dollar. So they already released information earlier in the summer saying, by name, borrowers' names are listed, but there are ranges of loans. I don't know what they are right now, but they might be 100,000 to 500, 500 to a million, 1 million to 2, et cetera. Now they want to know the exact loan that was borrowed by every individual borrower in the country. There's 5,355,000 loans, so it's going to be quite a list. And those of you that haven't had a reason to go in and look at that list, it's just information that somebody uploaded into an Excel spreadsheet, and it's 150 pages long now. So it's quite the product. So I mean, I know too fast to go over these issues, but as Mike said, even though they've issued all this guidance and so forth, the forgiveness process itself is somewhat convoluted, and it's difficult to see your way through all of it. We're here to help you if you need any help. We'll see if there was enough interest to have another session. If we do another session, it'll likely be at the end of November. Give ourselves a few more weeks so that you have a month to react prior to year end, but that we have the latest possible information to share with you folks. With that, I think I'll just thank you all for attending today. Again, as Brad mentioned earlier, in the earlier session, we have sessions next week, which are tax-driven by Don Johnston and other key members of our tax team. And then the week after Thanksgiving, I think that's December 3rd, they said, we have an audit program and a fraud program that day. Again, be careful when you get up from your seat. Don't trip on the table, and I hope your leg didn't fall asleep. And if you're still sleeping now, call me. I'll try to do something about the poll question that you missed. Thank you all.
So we think most of the questions that you submitted in Q&A were addressed live, but if we ran out of time, someone will respond to you. Also on the slides, if you download it from our website, Bob and my contact information is on this slide. you can contact them via email directly. We are going to close out the call. An evaluation survey should pop up. If you don't get it, don't worry about it. You will get a follow-up email tomorrow with a link, and you can complete it there. Thank you, and we hope to have you join us again next week.